All right, we're recording. So yeah, basically it's the same thing. Not basic. I mean, it's basically identical to what it is in trading. Actually, if y'all get a chance, um, I would definitely suggest reading a couple of books, The Disciplined Trader, and then also Trading in the Zone by Mark Douglas. You're going to find that it relates a lot to what you're talking about, Jonathan, with your poker, because it's all about what to expect. Having trust in what gives you the edge on our end, it's our strategy. It's our indicators that gives us an edge. It's not a guarantee that we win, a set number of wins in a row, or that we get a set number of losses in a row. Even though situations may look the same, there's always unknown factors playing out. But the main thing to expect is that over time, that having that trust in your edge and in your indicators as you play the numbers out, that in the end you're going to have a higher probability chance of coming out ahead than you are losing. And so it's keeping that perspective and knowing that, and holding on to that, and not holding on to that only, and also knowing that anything can happen. So we have a checklist. And so I definitely, if y'all don't have the checklist, let me know and I can tag y'all in the checklist. So this is basically, long and the short of it, what it comes down to is, other than practicing and getting the skill set down of identifying, being able to do your markups and stuff like that, are the checklists. So the technical checklist, let me know if y'all need me to send it to y'all, or if I need to tag y'all in the checklist.
That's in the unit, no?
Were you already able to get it, Will?
Yeah, I saw it in the units. That's why I'm asking. It's like one of the later units in the program.
Sure. Yeah, it may have fallen behind. I think it's actually in the files section.
Okay.
It's basically a brief summary of the trading plan. The trading plan is more detailed in a sense as how are you going to disperse your wins, and then also like it just goes into more detail, doing a mental. So also this is what I wanted to say too. So it comes to like the technical checklist, and then having a mental checklist, and like a mental and emotional psychological checklist, and an acceptance before you get into every scenario. I haven't done this yet with the group, but it's going to be in the new and final course. This is going to be like the one that we're going to let it ride for a while. Realizing some things, we've had to make some adjustments and stuff. So we're putting the psychology and everything first.
Okay.
So it's having these checklists, both the technical and the mental, making sure your expectations and your acceptance of risk and everything, and your indicators and everything are set in place and in order and everything. But also just most importantly, knowing what you're risking, letting go of the outcome, but trusting in the fact that what you do have is a proven edge. And over time, as long as you don't allow yourself to get out of trades prematurely or get into trades prematurely, or let your emotions get to you to where it starts to have a domino effect onto your rest of your trades, then you're fine. So it comes down to being able to get to, and he talks about it, Mark Douglas talks about it in that book, getting into the zone. Getting into that zone where you're just you're in the moment like micro, but you're also in a macro sense, knowing that, okay, I set everything up in the here and now, but in the long term, if this doesn't work out, this isn't going to determine my success. Losing the trade isn't something that I interpret as bad information, but something that I interpret as I have to go through this. I had to go through this. I had to go through this this loss to get to this win, and to get to these wins, or to get to this final destination. And it's continuing to just pump the numbers through. First thing though is, you know, is knowing and identifying the edge, and that's what the training course is. And so that's why we practice. It's primarily a technical strategy. You know, it's really accurate. I've had it up to 95% accuracy at times, you know, for a month, 2 months at a time, which is really highly effective. Now that was given a certain set of variables that were presenting themselves at that point in time. Now that we are where we are with the election and stuff like that, we've had months where we won 30 positions, over 30 positions. We had a day where we won 24 positions in no losses. And then the next week, I think the next week we lost like six in a row. And then the next week there was only like 5 opportunities. So it's getting in that flow and in the sync of not having expectations, but identifying opportunities, not taking trades out of a feeling of a necessity, like that you need to trade, but at the same time knowing what an opportunity looks like, you know, lining up your indicators and you know, playing it, no matter how you feel about it, as long as you mentally you check out and you know your technicals and everything checks out, then if you're willing to accept it, then you just you let it go. And that's like being in the flow. You know, you can get into the flow really, really good, and you can get into you know, the zone really well. But if you get out of the zone, it's really important to this is why it's important to do the checklist, because if you get out of the zone, you got to identify that, and you got to stop. You got to stop, and you got to go back, and you got to get yourself right, because if you continue to trade underneath the precepts or whatever that you know what's going to happen next, or that you're expecting the market to give you something at any certain point in time to fulfill a need or anything like that, then you're going to interpret information that the market has given you, either to set you up to be in a state of euphoria, which is not good, or to set you up in a state of fear that's not good. You want to be in the point where, you know, like I said, you're not having any expectations, except for, you know, that you're doing your job by doing your checklist, and you're looking at the here and the now, but you're also looking at the big picture, like, hey, this isn't necessary. This isn't about this one trade every time. You know, I'm looking at this is just another number that I'm pumping out. You look at the dollar amount, or, you know, the percentage risk or whatever that you have, and you let them rip. But a big part of it is going to be just getting down and identifying the edge. And so that's going to come. What's up, man?
Oh, I was just popping in to say hi.
What's going on, man? Carl?
Sorry, I'm just about to jump on a call. Just saying
Awesome,
hi.
man. Life's been a call lately, huh?
Yeah.
This is where you guys got to get on this. This is no last.
Yeah, you guys go make some money. I'm making some on the other side.
Awesome, man. Sounds great, man.
I'll be back in just 1 second. I'll be just literally like.
Sure.
Cool. So Jake, in the units, you guys listed a few like market monitoring platforms that give you some market information. Which one do you find is the best one and the easiest one to understand?
As far as the technical training,
Yeah, just the. I'm trying to look for it in the units now. I saw it the other day, and I thought that I need to ask, and now I can find it.
Sure.
Um,
One of them in the premium group is I think you may be talking about the training course, the technical side with the charts and stuff.
Let me see if I can find it. That's the checklist. So is the checklist the same as the trading plan on Unit 19?
It's basically a brief summary now, like the trading plan. One of the differences between the trading plan and the checklist. The checklist is basically a technical checklist. Now in the trading plan, there is somewhat of a mental checklist that tells you to basically check yourself and stuff in the trading plan, and it also breaks down a little bit into probabilities, what to expect as you're pumping the numbers through.
Okay.
But of course it's all going to be different according to each person, what they're starting with, what their lot sizes are and stuff like that. But I think the most important thing, is first just developing an understanding of what's going on, behind the scenes, and that's going to be included and actually I cover some of this stuff in the training, but we're going to be a little bit more in depth as far as establishing a fundamental sense of what's moving the market, because what's moving the markets are people's what other people are believing and what other people are feeling, other traders, what moves the market, so in that sense, there's a lot of technical traders out there, so a lot of people are buying, selling at certain levels for a reason, because everyone's looking at the same charts. Now you have people that are also associating fundamentals, economics and things like that into consideration. Like right now, I really haven't been going over much of the strategy, the technical strategy that we have. I have brought it in, but with the trainings and stuff, if y'all check them out, the calls that we've been getting on, I haven't exactly been going through as much emphasis on the technicals as it has been the fundamentals, obviously, because there's so much going on right now in the world with news, and we're talking about anything can happen at any given point in time. Like literally anything can happen at any given point in time. Trump tweeted the other day, it was like 2 days ago. Trump tweeted, said that he was done with negotiations on the stimulus, and every trader in the world sitting there with their finger on the buy button, maybe already pressed their finger on the buy button in hopes of the stimulus, because it was really looking like we were going to get stimulus and everything. Well, when he tweeted that for the House to stand down on the negotiations and everything, literally everything just tanked. Everything tanked. So that's another one of those unknown indicators. But so anyway, so as far as the way that the market reviews and mentorship calls have been going lately, has caught just the times that we're in. Just so y'all know, these are like this is if trading was sailing, like if I was related to sailing, we're sailing in freaking in the Baltic.
I can imagine.
Hey, but there's also, with that being said, there's big waves, but with the big waves and the volatility comes good opportunity. So there's definitely some really good opportunities right now. There's definitely some things. There's definitely some areas right now that hasn't recovered from the pandemic. And I always tell everybody, man, like I'm on a call and stuff, y'all hear me say because of the virus, this and that. I don't necessarily believe in the virus, the way that they portray it, the way that the media or anybody portrays it. But I do believe in it in the sense that it does exist in a form of fears and beliefs and reactions to people, and it has an effect on what the market does. So I have to consider, greatly, like when new outbreaks and lockdowns, the lockdowns are evidence that it does exist in some form. So, you know, they're locking down places, and, you know, they're when a country, like when it comes down to currencies and stuff like that, when a country or an economy experiences new higher rates of deaths or cases, then that's seen as like a bad thing for the currency. But anyways, that's all fundamental stuff. Regardless, and the reason why a lot of people go with technicals, you know, and the reason why, you know, we put the edge on our edge is essentially a technical strategy, but we keep in mind, you know, we try to keep in mind the best we can. Hey, they're what's going on behind the scenes, what's pushing the markets and stuff. But just getting the time in and placing trades, practice on the strategy. One big thing that gave me I think the thing that gave me the biggest edge was when I spent enough time in front of my screen and let my eyes adjust, and I had enough time in to where I placed enough trades and I watched the market's reaction, and I seen what was and wasn't working, and I began to develop because I don't know if y'all saw the interview with Terry, but the last mentorship that I got into, it wasn't complete by any means, but I mean, I was determined in the mindset that I had going into it. The determination actually got me through it and got me to a place where I was able to make adjustments on it from observation and fix it. And so basically that's what we're dealing with. That's what we're dealing with now. And so we worked the kinks out and everything in it. But what got me to that point was just being able to like fully submerge. So if you're looking to get ahead, whether you're trading on a demo or if you're using a live account, which I would suggest probably to do both, is just going through the course and you know, doing markups, getting markups out there, placing trades. You know, you can keep the leverage really, really low as you're starting out, you know, so you can keep the losses, the risk to a minimum. For the most part, recently, and this can change again at any time, whenever we're on mentorship calls and stuff, many of the scenarios that we're giving out, they do play out, but you know, like I said, that could be given, that can change at any time. You know, we could have 20, 30 wins, but we could go through 5 or 6 losses, you know, but
it's just the nature of the beast. That's how it works.
Yeah, no, it is. And so it's like you always got to remember, you know, to keep yourself in check, start getting emotional stuff then to slow it down, you know, slow it down, take a step back and get it together again. You know, remember what your focus and expectations, and check your beliefs, make sure that you're not, you know, in your wants, in your needs, and you're leaving those things, all that stuff behind as you're trading. Because that's like before, you know, you ever get into trading, it's so important to do that stuff, because without it, then, you know, you can have the best skill set as far as technical analysis and being able to you know, get all that stuff down. You could pick winning trades, but you could screw it up if you don't let it go, because right, because it can go into the negative. It can go into the negative, and if you see that as a bad thing and you move your stop loss, and you continue to move your stop loss because you don't want to lose the money you didn't let go, and then you had your risk set at, you know, 3 to 1, but you moved your stop loss, and let's say you're up 3 trades, and you kept moving it down, and you got into the negative to where your risk to reward, where your risk was much greater than your reward, and you end up getting into a big drawdown and you lost the trade, then you messed up your probability. And not only that, because you messed up your probability, you took off all the profits that you got previously. As to where if you would have just let it go and continued to let it play out, then you'd still be in good, you know. So
I think it's important that you say that, because it's almost what it feels like now, that I have to get started with this now out of necessity. And I think it's important to not get too, have too much expectation of it and get too emotional with it, because that necessity is there, that need for getting it done and getting going with it. So I think it's important that you mentioned that. I need to make sure I don't do
It's
that.
a fine, no, definitely will. And it's a fine line too, because you do want that. It's a very fine line, but the expectations, like you can feel like, hey, like determined, I guess, like being determined is different, to get the skill set down. When you're focusing on the skill set, and this is what I would suggest: focus on the skill set. Try to leave the numbers and the profits and stuff like that behind, and don't necessarily think about it. Yes, accept the risk, but like let that stuff go and focus on developing the skill set. Not so much like, hey, I'm about to come in here and start killing it, making profits right away. But if you focus on the skill set and you focus on the amount of pips and stuff that you're gaining, and you have pip goals instead of money goals, it helps you leave your emotions and stuff out of it more. And so your money is going to come through. Your money is going to come through the development of the skill set, not the necessity to acquire money, because we have our emotions attached to money. So, you see it start, going away, and you have expectations of winning and gaining, and then you lose it. So it's actually backwards. So focusing on just getting the skill set down, getting the mindset right, probabilities, staying focused on probabilities over everything over a large period of time, identifying opportunities, getting in, letting the cards play out, repetition in your analysis, whether you're mixing the fundamentals and taking fundamentals into consideration or not. I will say just focus on just like the technical strategy. It's sound enough, as long as you have good risk to reward scenarios, just focusing on that, doing markups, keeping a journal. I would definitely, whether you're screenshotting your stuff or you're jotting it down or both, if you have a place that you can take a screenshot, send your screenshot to like a file or folder or something like that. And so you have a place to where you can see your progress, and then also a place to where you can look back and and that's also something that the trading plan, that's inside of the trading plan. Let me know if y'all need any help finding it. I'll tag y'all in it or send it to y'all. It involves keeping a trading journal. And so I found it's a lot easier just to take a screenshot and send it somewhere and put an outcome. I think in the trading plan, it has you do the mental and emotional checklist along with that. So, you can go back and look and be like, I was anxious when I took this and it freaking went bad. And you see it. if you see that occurring over and over again, that can help condition our minds to what, to not trade when we're anxious. If we can look back and see, I was anxious when I lost this, and I was anxious when I lost that, when I lost it, and I was anxious and I pulled out because I was anxious. Or I got afraid because I got to the negative. The trade actually played out, but I bailed. And then at the same time, on your winners, the ones that you win, you can look at those. You can look at the data for your winners, and be like, well, this is the way that I need to enter. This is the way, the condition in which I need to enter a trade, and these are my indicators and everything I need to have. And this is like the state of mind that I need to enter the trades in. And so it's by going back and going through the journal from time to time. As you go through a period of time where you have like a series of losses, it's a good place to go back and regain your bearings, so that you can say it helps condition your mind. So if you can see and experience it twice, then it's a trade twice, and really absorb it, then it's going to help condition, the way that you think too about the scenarios.
Yeah, no, that makes sense. Kind of doing an emotional trend line as well, that you can correlate with what happened. Right.
For sure. I didn't want to get too far into into details and everything with y'all. I didn't really don't know if y'all have any questions or whatever. If y'all had anything for me, let me know. We can get to that stuff. But I just wanted to set just kind of wanted to give y'all like an overtone of kind of like what to expect. But I definitely would get into those books. Let me know if you need them. I put them in the signals group, but I can resend them to y'all, no problem. If you wanted to get into them, it's going to help definitely get your mind game, everything right in there.
Yeah.
And I can send those to you. They're not long books at all.
Cool.
But what questions do y'all have? You're needing to know, like how to get into trades or what to.
Yeah. So John, you can jump in, with questions you have as well. But for me, I've gone through all the training and I understand, the trend lines and your support and resistance zones, adding those and, convergence and all of those things. It's just on MetaTrader 4 itself. How do you add a trade? How to put an actual trade in there. And you have, in a lot of the tutorial videos, you have like one stop loss, but you have multiple take profits at different levels. So how do you add those multiples instead of just having one stop loss and one take profit type of scenarios? Just, I think it's from a MetaTrader 4 application perspective. How do you add your trades on the application itself?
Okay, for sure. So it's actually, so like when there's a scenario where you see, and this is to make trades more manageable. So having multiple positions is like having multiple rounds of ammunition. Instead of giving yourself one shot.
Yeah.
So basically, if you have 3 take profits, you're gonna enter the same stop loss. You're gonna enter the same stop loss. You'll place the order 3 times.
Okay.
If you were going to let's say for instance, to make it simple, let's say that you're allowed a 0.15 to trade with, 0.15 to trade with, and you had a let's say you had like a $1,500 account or something, and you're trading like with a 0.15, and you wanted to enter a trade. Now, instead of if you just wanted to enter one trade and you were wanting to enter 3 positions, instead of entering directly at the point of entry with 0.15, then you enter 3.05s, then you could take profits at different points in the trade.
Okay.
So in one position for each target. But if it looks like a trade's going to turn around and you maybe even haven't quite reached the first target, maybe you can take 1 or 2 positions, move your stop loss to break even, and let the other ones ride out.
Okay. So you can always adjust it as it goes along.
Sure.
So each, if I understand it correctly, then each trade will have 1 stop loss and 1 take profit. You will just put your stop losses all at the same level, and you'll take profits at different levels to get the multiple.
Sure. And I can share a screen real quick.
Yeah.
Let me share a screen real quick, and I'll kind of run through it real fast. No, not real fast, but I'll show you all what I mean. Let's see what we got here. Okay, this may be a good example. This one we had our technical indicators set up. We had established trend 1. I just want to run through this real quick, and then we'll get to these multiple positions. We have 1 touch, 2 touches, 3 touches. So we had an established trend. So and this is what it comes down to. And I'll just give a brief rundown of, you know, basically what you'll see through the trainings and stuff and through the course and everything. But it's all about identifying what's a high, where's low, what's high, where's low, and that's it essentially.
Yeah.
You want to find out where the high is and when it's going to go down, and you want to find out when it's going to go up, and you want to get in and you want to get out. So you just, one of the ways to do that is by establishing a trend, a line where it's like, been like, okay, well, it's turning around. Something happened right here to cause this to turn around. There's something right here that caused it to turn around.
Yeah.
And so you start drawing your trend out, and you see price come up here again to your trend, and you see a wick right here. You see rejection. You see it come up here, and it stops around this area. You know, it doesn't have to be right on here. And we see a transfer from buying to selling power, buying power, rejection, pin bar, selling power. See this long wick, rejection. So what we have here is a head and shoulders. You got head, or I guess it's a double tops, but it's more like a head and shoulder. You count this as one, 2, 3, 4 rejections. And it's at also what we determined was a high from where price had turned around before here. This price was rejected here. It was rejected here. It was rejected here. So again,
almost a similar pattern almost.
So we draw this, and not only this, if we drag this over here, we'll see that it was respected here, that it shot down, whoops, that it shot down and respected it again because price came down, but it didn't stay down there. It was pushed back up. It was respected here, here, here. See that right here, here. So we know that this zone also turns around price. So what we're always looking for is to identify this area where we see a trend, a support or resistance level. You know, this is marking a high. This line is marking a high. We look down here at the RSI. This is an indicator down here, an initial indicator telling us that it's at a high. So we're looking for these confirmations. These things are what gives us the edge. And so after we've determined that price is more than likely at a high, we start to look for signs in what we call price action confirmation. So we know it's at a trend. That's one indicator. We know it's at this level where price has shown us previously that it likes to turn around. So we know that it's a high from this trend. We know that it's at a high at a zone too. And so it's this intersection. We know that it's at a high because of what it's showing us at the RSI. It's at this dotted line. So then we start looking for rejection in candlesticks at this zone. We see multiple rejections in candlesticks. We see, we'll go ahead and call this a head and shoulders. We'll say shoulder, head, shoulder. So this is basically just multiple rejections. So we got buying power, bearish engulfing, buying power, bearish engulfing, buying power. We got rejection. So we're getting these signs of rejection at this trend and at this zone. And you can also see right here, it's established a trend going through the bottom of this, and it breached. And that point in time, it was complete. Now, because you're building, what you're doing is you're just building confluence. You're saying, okay, it's at a trend, it's at a high according to this trend, it's at a high according to this zone, or at a level that price loves, at a zone that price loves to turn the price around, that it loves to turn the price around at. And so you build confluence, and then you're like, well, it's also giving me signs that price is being rejected. So an uptrend is a series of higher highs. So we got a high, higher high, higher high, higher high. And what happened is kind of sidestepped. So that's another indication. You start to see a rounding out.
Okay.
So now when it comes to the point of entry, let's just get to the targets right here. Our point of entry, a lot of people would enter right here, but for our strategy, it would actually be like right here.
Okay.
Because we're looking at this red candle and we're waiting for these engulfings to show a definite transfer of power from a second time. So this red candle, these grays cover up this red candle, this last red candle. So there's more power here than this last. So it's showing us that it's gone from uptrend, power's taken over. So this is showing a clear rejection. And then it happens again right here with this candle. This gray candle covers up this red one. These group of candles cover up this one. That gives us a sign of rejection. And so here would be our first entry. Now, when it comes to the different, I just wanted to run that through real quick. But as far as, you know, the different take profits, like on this one right here, we have 1, 2, 3, 4, and it still may come down and hit those, but you see that it hit 2. So instead of let's say if you have one position and you just wanted to hit this one target right here, okay, that's fine. But what about the possibility of it coming down here? So if you opened up 3 or 4 positions and you seen it start turning around right here, and let's say right here that you entered at this line. Let's say that you entered right here at this line. So let's say that you seen it turning around and you had 4 positions open. You're like, oh, it's turning around. I don't, you know, of course I don't know where it's going to go. I'm going to go ahead and I'll take 3/4 of my profits. So you can take 3/4 of your profits, move your stop loss to break even, and let this trade play out. This trade ended up turning around and coming the rest of the way down. So it's a way of utilizing, you know, maybe in a lot of instances capturing the full potential of a trade. You know,
just to clarify, so you would get in wherever the entry point is, and then you would set the stop loss because you're shorting this. You think it's going down based on the fundamentals. So your stop loss initially is 124.950, and your first take profit is 122.944, right?
Well, let's see. So I'd actually put it on the outside somewhere. When it comes to the stop losses, see, so you want to use this stuff to your advantage. So I will put it outside of this trend and on the other side of this zone, because these are like barriers.
Okay.
You know, so having the stop loss out here, it's safer out here. Also having it in a place where, you know, it's slightly above a high that you might see over here to the left. Always look left. Putting it up here, it's safer. You can put it like right here, but it's already showed you that price has no problem coming here.
So that gives that time to kind of play in your favor downward, right?
Right. So if you entered here at the second engulfing, the second full rejection, if you entered here and this came back up like it did, then it didn't stop you out because your stop loss was on the other side.
Okay.
It was on the other side of the zone. And
so in the first stop loss, you know, 127 and change, and then you say the first take profit's 122.944. So if you wanted to put the second take profit, would you put the next take profit is 120.722 and the next stop loss is 122. Like, does the green line, the first green line, become the stop loss?
That's a good question, and always keep in mind too. There's a literally endless amount of ways that you can do this, but some people don't even use. A lot of people don't even use. Not I'm saying a lot of people. We all have like a place where we was like preferably, or not preferably, but could see taking profits. Like, okay, it comes to this area, I'm gonna take some profits because it's above, because there's a resistance right here. But so sorry, what was your question again?
So so the first stop loss is at 127.411.
Okay.
And then your first take profit is at 122.944. So let's say you hit 122.944 and you have a take profit. You take that off the table. And then you say, because you have two more take profits, is the second trade entered as like the take profit for 120.722? Is that entered as take profit 120.7.22 and stop loss becomes 122.944 because that's where it crossed, like when it crosses through, does that become the stop loss?
So does the stop loss of your previous take profit become, does the take profit of your previous trade become the stop loss of your next trade?
There's a couple of ways that you can do this. One of them may be a little bit more advanced. One of them is more advanced. I'll show you a couple of the most popular. So let's say we entered right here, right? And let's say we entered only, in this case, let's say we're looking at these three targets and we're looking at the scenario where we have a 0.15 to deal with. Excuse me. So, and this is what they call scaling into a trade, instead of jumping in at full amount of leverage. So let's say right here you put in a 0.05 and you use this stop loss right here, and then as it came down and it broke this trend, you entered another 0.5. Well, when you entered right here, entered this one, you use this stop loss, or I would use this stop loss to enter a 0.05 here in this take profit with this stop loss. Now, if as it broke right here, and this is just being progressive with your trade as it's going in the direction that is bringing you the money. So let's say I entered another 0.5 right here. I wouldn't necessarily want to put my stop loss up here because that's screwing up my risk to reward if I'm going for this. So what I would do then, I put it above the next previous swing high. I put it again, I use my trend, and I use this rejection up here as my ally, and I'll bring my stop loss down down to here, maybe above here, because we saw price was rejected right here. So we know we don't know anything, but we're looking at it like we have a higher probability that prices broke this zone, this trend right here, and you can see that it's come back up and it's retesting it, and there's a good chance this is going to come down, which 7 out of 10 times is exactly what's going to happen. You're going to have a head and shoulders or double top. It's going to break it. It's going to come back up. It's going to test this area again, and it's going to drop. So this is actually another entry up here too. But anyway, so let's say we're getting the second entry right here. We're entering our let's go ahead and mark these entries. Swing this thing around. So this would have been a 0.05. This is at our this is our first entry. we would have had our stop loss out here to hit this target. We hit the target and we entered another one here. And by the way, this is a common entry right here. Very common entry, more common than this one. At this point in time, you have a less likely probability that the trade's going to turn against you because you see a strong move. You see it's broke through. It's broke through this trend. It's completed this reversal pattern at this trend and at this resistance. Okay, so you enter, let's say you enter another 0.05 here. You're like, okay, I'm gonna go ahead and enter a 0.05. So you modify your stop loss maybe down to here. And so you switch your stop loss from this position that you entered, you modify it to 1.25772. And with your new position, you put it as 125.772. And so let's say you hit your first target. So one of them is out of there, right? If you seen it turning around, you could have taken the other one that you had going too, you know. It's all dependent on how you want to do it. But I will tell you again that when it comes to this one up here, this is another entry right here. There's several entries right here. Several people would get in just right here on this pin bar at this trend in this zone. They would have got in right here. But the probability isn't as good as if we got to wait for engulfing candles.
Yeah.
But anyway, so another entry would be right here. We see signs of rejection, indecision, these dojis right here. Another position right here. So let's say that we just took one of them. Let's just say that we took one of them and we added another 0.05 right here. Then you might set it. Then you might set it for somewhere down here. And this is more. This is I wouldn't say this is like hypothetical, but if you broaden this out, if you look at the bigger scope of things, we know that the end of the road, so to speak, in a technical sense, is somewhere down around here because we've seen a big downtrend, boom, stop. We saw another, rejection down here at this trend and around this zone. So I'm putting any targets, any profits that I want to collect, I'm wanting to take them. We got this zone right here drawn, and look at what happened. It respected it right here and started going back up. There's a number of ways to do this. As far as doing it with multiple positions, you don't have to do it with multiple positions starting out. If it's not making sense to you, then I definitely would just start out with one.
Okay.
Now another way to do it. Let's just say that you're going to go a more simple way to do it. And there's nothing wrong. Remember, we're just like going to be gaining. We're just on a mission to gain understanding of, getting the entry right, identifying opportunities and getting in, letting it go, having somewhat of an idea, where you would be all right with taking profits. So if you're going to do say this entry right here, this is going to be one of your more common entries. The entry we have is a little bit more premature, but we have other indicators that we're using. We're using a confluence of indicators. The RSI is telling us it's overbought, where the trend is telling us it's at a high, and this zone's telling us it's at a high. A lot of people aren't going to take this trade until they see this pattern complete. And it's not complete in a technical sense until it breaches right here. So a lot of people would enter right here just because the probability of it coming back up after it's broke this zone. See, because it's come up right here and it respected this zone, this line. When it came back up, it respected it again right here. It had trouble going through it. It was rejected right here. It was having trouble going through it, and it was rejected here again. But something happened right here where it broke through. And so the likelihood, the probability of it going back up and just going zoom right up to hitting your take profit is not as good as it is to continuing down.
Okay.
So this is a scenario given the indicators that it's also at the trend, and it's at the you know, the zone, it's at the overbought on the RSI. I may as well go over the other indicator. We got a slight uptrend across these tops. Or actually, RSI is telling us downtrend. If we take this, if we line this peak up with this peak, and I don't want to get too far off track, and this peak up with this peak right here, it's saying downtrend at an overbought zone. This is saying uptrend at where we know that it's coming up to this trend in this zone. And so this is giving us another indication. So not only is it at an overbought, but it's showing us that it's losing momentum, and that momentum is transferring downward. As well, we can take this earlier position. But anyways, I don't want to get too far off track. Just wanted to finish off the indicators there. It probably seems like a lot to identify all this stuff at once, but once you go through it, and you know, we've had people, brand new beginners, you know, not knowing anything at all, go through the course, and within a couple of weeks already like spotting their own trades and hitting targets and stuff. So then it didn't make any sense. It didn't make any sense. Now that those are instances, you know, that are, you know, I wouldn't say they're rare, but because they've happened quite often actually, and people had doubled and tripled 3 times their account within the first couple of weeks. But I'm sure that they put in my point is, like, they started to understand it enough to where they could identify opportunities, get in and hit targets. So that's you know, that's really good.
Okay.
That's really, really good.
So when you say getting into a trade, is that the point at where you put in your stop loss, your take profit, that point in time? Is that the time that you're getting into the trade? Yeah,
that's where you commit. So
okay.
And that's also where you let go of your, you know, first you let go, you know, expectations, you accept the risk. You look at it like you know, and on your MetaTrader, it'll show you, you know, how much risk that you got. But you look at it, you're like, okay, I'm accepting the fact that I could lose. And basically what I do, I accept that I lose it. I accept that I lose it. I accept, you know, whatever happens, you know, just like, all right, I'm going to do this, but I'm going to do it knowing that in the long term, I could lose this one or lose, you know, 5 in a row. But, you know, there's just around the corner, there's also going to be a series of, you know, of winners too. And there's going to be more winners than losers in the end, because we have so many, we have such an edge working for us. So back to doing this the simpler way, using this entry right here. Let's say we just use this entry right here. The point where you get in and you set your you stop loss. We'll say we'll put our stop loss up here, and we put our take profit down here.
Okay.
I'll put it there just because I seen it probably stopped up here. Stopped up here. So this was once resistance. And now that price had broke through, there's a good chance this zone still exists. So that's why I put the take profit right here.
Okay.
the first take profit right here, because I know that this is a price, a area that likes to turn around the price. So if I was going to take one swing at this, then I would take it at the zone, and it did hit it. But look, it also did turn around. So the other scenario would be, get it in right here with your full amount of leverage. You put in your your 0.15, you let it go, you collect, and you're done. Another way to do this is to not use a stop, or not to use a take profit at all. Is not to use these things at all. There's plenty of people that trade this way.
So that
You
would
have to be actively managing that. Like you have to be seeing it to know when to get out, right?
Yeah, so if you enter here, let's say you entered here, stop loss is up here. Once it breaks down and it breaks the zone, like here where it stopped, see this rejection. Once price came down here, or once you got like 20 pips into it, once you got like 20 pips or 15 pips or whatever you choose, once your price, let's say you entered here, I don't really like entering here as much because that's a giant step down, but for example, let's say you entered right here where the blue line is, okay, and it came down. Let's see. You're at 30 pips already right here. Hang on, this is on the daily time frame. Okay, so this is a big trade. So you're at 30 pips already right here. If you're using a mini lot, that's like 30 bucks. If you're using a standard lot, that's like 300 bucks. If you're using a 10, that's like 3,000 bucks. Also important to note, like it's the same distance, it's the same 30 pips that can make you $3 on a micro lot, or it can make you $30,000 on a 100 lot position. But in any case, so let's say it came down 30 pips, and we could tell that from, you see where it says, let's get it to around 124. That very last number, that 8, that's the pipette. We don't consider that. So let's say we got in at 1.24000, and we're only going to count the first 2 digits past the decimal point. So those 2 zeros, and we're going to go. It's actually going to go in the negative on us, I think. Yep. So we'll go down to 70-ish. So let's say that right here we already went 30 pips.
Okay.
Or we can say that we went down 50 pips. That's quite a big move. If you got enough leverage and you've been consistent enough, and you can get 50 pips a day, you don't have any problem surviving like the rest of your life financially. Once you get your account built up and you get all these other things built up, a lot of people get the impression that you got to make these giant freaking moves all the time to make big money, when really you can use it as long as you're consistent and you build consistency first and you learn how to use your leverage right. Then you can leverage a small little piece. If you get consistent at taking just a small piece, then you'll have no problem eating the rest of your days. But so we went down 50 pips. In this case, we entered here. We got 50 pips. Another way of doing it, not using take profits, is using your stop loss as a take profit. Because basically a stop loss and a take profit are the same thing. It's a point in time that you prematurely put in there to say, I'm selling my order at this point. So a lot of people, instead of putting a target down here, will just trail a stop. They'll wait for it to get into the profit. Let's say it got into the profit 30 pips or 50 pips, and we put our stop loss at 30 pips. Or we just hug it.
When you say hug it, what does that mean?
So we're bringing our stop loss. So before, when we entered here, we had this much risk on the board, because if it would have went against us and stopped us out at here and sold our order up here, we'd have been in the negative. Okay, but since it went into the positive in this scenario, we moved our stop loss down and we erased that risk.
Okay.
You see what I'm saying?
Yep.
Because now if price turns around, it can't go back up here. Let's say we moved it down here. Let's use it. Let's go ahead and say that we went, since we're on the daily, let's say we went like 90 pips and it did go over 90 pips. It probably went 100 pips. So our entry was here. This was our entry point. If we move our stop loss to our entry point, there's no longer any risk, because if price was to turn back around, it would stop right here at the point we entered the trade and we would break even.
Okay.
But what you want to do is, first, if you want to trade your stop, now you're preserving your profits. So if you entered here, that's about 60 pips. You trail your stop loss past your entry point. So you pull your stop loss past your entry, 60 pips. And now if price decides to turn around, it's going to collect your profits right here, because you're 60, you move your stop loss 60 pips in the profit. Does that make sense?
Yeah.
This does a couple things. So by doing it this way, it allows you also to let your trade play out further if it wants to do that. So by not having a designated target and trailing your stop loss and using only one position, you can do this with multiple positions too. But by doing it this way, if this trade wanted to continue to go on down, and you see it just continue just to make its way and have a good,
Have a good run.
good time just falling, no problems, and you just continue to drag and adjust your stop loss. At this point, you'd be well into the profit, and sometimes, you'll see prices continue to come down, and you can just continue to trail, modify your stop loss. The further it goes down, the further you move your stop loss down, it turns against you. It cuts your trade off right here. You secured all this profit from your initial entry doing it this way.
Okay.
I do a variation, but this would be like an alternate way. This would be a simple way, another simple way to do it, opposed to running multiple positions. If the multiple positions is a little bit too much, then shoot, it's not the only way to do things. That's for sure. You can rocket just one position as you feel comfortable, and as you start to understand it, then, as you start to feel more comfortable, then you can definitely, you can start adding stuff to it. The scenario where we scaled in and we got in a position here at a 0.05. Y'all remember that? We got in here at 0.05 instead of getting in at a 0.15, and we just used a small portion of our leverage. We slowly stepped in. This is what I like to do. The advantage to doing this is that, let's say that you got in here and you got in at a 0.05 instead of using a 0.15, and the trade went against you and it did go and it hit your stop loss, then you only took a 0.05 to the stop loss instead of having taken all of your leverage with you up there and lost 3 times as much.
Yeah, that definitely makes sense.
Yeah. So there's several ways that you can, that you can scale in and you can scale out. You can scale out too. But to keep it simple, as you're being progressive with the trade, and you're adding bits and pieces of your leverage along the way, that's just one way of doing it. That way you can slowly get out of the trade too as it progresses, or as it looks like it turns around. If you have multiple trades, one thing that does for me is I can take some profits on like two positions, because there's always this part of me that kind of wants to stay in the trade to utilize the full potential of the trade, and then there's a part that's like, I want to hurry up and win and get out of here. Well, you can do both when you got multiple positions.
Okay. Cool. And what is the preferred time period to trade on? Like the day, on the day chart, 4 hour, 1 hour? Is there a right or wrong, or?
There's not really. There are people that trade on the 1 minute. There are people that trade on 5 minute, 15 minute. And here's the thing about the strategy that's in the course, and everything that you're going to learn is that about all this stuff. Like, here's a head and shoulders over here. Shoulder, head, shoulder, reverse. 1 rejection, 2 rejections, 3 rejections, reverse. This divergence. My mouse has been messing up on me lately. Between these 2 peaks, it's saying uptrend. It's at an overbought, right?
Mm-hmm.
But if we look down here, it's saying downtrend. See this peak? It's showing this peak, how it lines up with that dotted line.
Yeah.
Up here, it's saying higher. Down here, it's saying it's lower than this one.
Yeah.
See, up, down. Having these indicators like this and seeing these price action patterns up here like this, it doesn't matter what time frame you're on. You can use it on a daily, on an hour, on 4 hour, on a monthly, on a 5 minute chart. It's crazy, because this is actually this is like human behavior. It's repetitive. I guess this has to do with our, just the way that we are. We're creatures of habit.
Yeah.
And so we have these habits in our beliefs and our actions and thinking and things. So it's deep stuff, man. But it plays out the same. It's crazy, because it plays out the same. Not every single time, but this is what gives you an edge. This is what makes your probability better. Learning how to do multiple positions and stuff like that sharpens the edge.
Okay.
But a good place to start is just identifying, getting good at drawing your trends, drawing your trends, your zones, and finding this area. Noticing what rejection looks like, identifying, your candles, what rejection looks like, what an engulfing, and it's all in the training. But as y'all having questions and stuff, man, y'all already know, man, just hit me up about all this stuff. I just always encourage everyone to hit me up, holler.
This definitely helped a lot. It's given some more clarity on everything that was in the training already.
Sure.
So that definitely helps.
Let me. I wanted to show. I don't know if y'all got a chance to go through the training or not. Have y'all got a chance to go through much of the training?
Yeah. Well, I've gone through all of the units and everything.
Okay.
Yeah, I'm about 70% through.
Okay. I don't know if it was on the training that y'all got into. I don't know if y'all got into the pro, but we kind of put the pro on hold for a while because we had some payment issues and stuff. Yeah. And so that's why I decided to go ahead and finish through with the relaunching on the website and stuff. But it's going to be an interactive platform and everything. So we'll have the chat, we'll have the mentorship, we'll have all that stuff off of it won't be associated with Facebook. But anyways, just wanted to show y'all real quick, like the difference in time frames. And I don't know if y'all got to see this. I don't know if it was in the premium course, but if you just look at these two tops right here, like you see this top, and it goes down with a double bottom in the middle. So we got top, and actually if you look at it even closer, head and shoulder, shoulder, or head, shoulder, head, shoulder, double top. Anyways, but from a broader perspective, this is a top, this is a top, little double bottom in the middle. If you focus on that in this uptrend, this little shape.
Yeah.
And we're on the daily. So each one of these candles takes a day
Okay.
for it to set. If we zoom out to the 4 hour, then all we did is we zoomed out.
Okay.
So here's the same one top, two tops,
Yeah,
double bottom. It
Okay.
looks a little different because there's more candles, but it's the same. We're just zoomed in, and you see how much closer it looks right now.
Yeah.
If you go to the daily, look, now you can see all this. So whenever you're switching from your daily to 4 hour to hour, let's look at looks like on the hour. We're gonna zoom in big time. You'll see one top, two tops. This is the double bottom that was at the bottom, one bottom, two bottoms. We can't even see hardly that trend over here anymore.
Yeah.
But we can see that little head and shoulders that we see.
Mm.
See, so it will zoom out again. And here it is over here, that same.
So logically in my mind, if you trade on the daily, then it just takes, so if you add your take profits and stop losses and things, it just takes longer for those trades to play out than it would on, say, an hourly chart. Is that
Absolutely.
how it works?
Yep. You know, and everyone's different, and you know, it's just it's through experience and you know, what's your preference, what you're going to gravitate towards. You know,
Yeah.
do you like to hold on to trades longer, and also you can make it accommodate to your lifestyle. Do you want to be able to set a trade and not have to think about it for days at a time? Then, you know, you might be a swing trader. Then you'd be trading on daily, weekly. If you're wanting to get in and out of there, you can be on 5 minute, 15 minute, and look, you can still see. Look, here's the head and shoulders, shoulder, head, shoulder.
Okay.
Double top, 1, 2, fall. Double bottom right here. And y'all look at this right here. So we got double bottom. And yeah, these play out a lot faster.
Yeah.
I actually like the 15 minute. I've been kind of, I wouldn't say distracted, but more focused on fundamental stuff that I have technical stuff. I'm looking forward to getting past this month with the election and everything, because this is the I've been forced to brush up on my fundamental analysis and be in the news and stuff like that. You know what I mean, with everything that's going on. So at the end of the day, at the end of all this stuff, would be better trader at the end of it, you know. But I'm really looking forward to coming back to this stuff, because this is the stuff that just like doing this is like trading in these conditions, just using the charts is a piece of cake for me. I mean, that's what comes naturally to me, you know. With that being said, you got other traders that are naturally fundamental that like to be like Rostam. But you can see here 15 minute, same thing. You got double bottom, you got straight across right here. It's at an oversold divergence across the peaks or across the bottoms. It's saying it's lifting off down here and goes up. But knowing where to take your profits, you always just look left. As far as technical analysis goes, you want to look left and see where's the last time the price was stopped. In this case, cases like these, it'd be just like this. I would look at if I was running 2 positions. Mouse is screwing up. Like it doesn't even have a little rolly ball on there. I don't know, my laser's messed up or something. Back in the day, they used to have a rolly ball on them. Huh? They'd get a piece of lint on them and it'd be all screwed up. But so I'll look to the left. Here's a place where it came down, found support. You know, good chance it would have got rejected here. And you can actually see it jumbled up right here. Got a little bit of interference right here.
Mm-hmm.
So I would look at taking profits on one position. Let's say if I was going to run 2 positions, I would try to take profits before this zone because of these rejections here. So I'll put a take profit like right here. Move my stop loss up after I hit a take profit, maybe up to here on the other position, let it play out, and then, you know, take another profit up here before it gets to this, because I know there's a good chance that because price came over here, came up, and was rejected, there's a good chance the price is going to come up and be rejected around that same area. So
yeah. Okay. Cool.
but yeah, so same stuff, different time frame.
Yeah.
You know, there's pluses to each one. You know, I guess I'd just suggest just trying them all out. If you don't have a whole lot of, and really it works either way. I mean, because if you don't have a lot of time, you can get your trading done on the 15-minute or the 5-minute and get in and out of trades faster. You know, and so you save time doing that. And then if you're on the daily, then, you know, you get set a trade and forget about it for a while, check up back on it from time to time, you know. Either way that it goes, I don't think that the time after you get good at finding the opportunities and setting your stuff, that's what takes the time. I go through those whole list. I can go through all of these in 2 or 3 minutes, and I can tell you, like, if there's a trade this prefer, like for me in the time frames that I like to use on, that if there's one set up for me that if there's any setups that I want to take in the morning, I'll come out and look, and I know, like, you know, like quick, like really quick, you know. But it just takes a little bit of time it's different for everyone. A lot of time, like I said, it took just spending time in front of the screen, letting your eyes adjust, because at first when I look at the stuff, I couldn't freaking understand or see a pattern or see anything, but eventually it like starts to come to life, man. And you can look at it instantly and you just see patterns everywhere.
Yeah, I think I need to spend more time to, you know, look at charts and do mock-ups and, you know, be in the group. So I did have a question. There were a couple of groups. There's like a Facebook chat. There's like 3 Telegram chats. I'm a little confused, like where to go for what. So Facebook and Telegram, like the main group, is that the same thing, just different location?
So here's the Telegram. Let me get these. So this is the Telegram. This is the Telegram chat. This is where we interact. Anne's always dropping her markups in here. And the point in time where I saw the most growth in my technical analysis, my mentor, I kept sending my markups to him and asking him, like, hey dude, is this right? You know, hey, is this right, dude? Like, because I want to know from him. Yeah. He's like, dude, he's like, go and he's like, put it in the chat. I'm like, but I don't want people taking my markups and placing them and losing money. He's like, dude, he's like, that's not what, it's like people aren't doing that. This is the help kind of see what other people are doing, see what you're doing, a place that you can have that will allow you, that provides you the opportunity to present repetition of getting it out there, of marketing it up, getting it out, you know, placing your trade, seeing the outcome, also seeing what other people are seeing and kind of seeing how they're doing it too along the way, whether it's right or wrong. You know, it all helps build an understanding. It's something about that repetition. But I started seeing the most when I was like, dude, screw it. I'll go ahead and start putting my stuff out there. And just as I was practicing, I just put it out there, and I would just sit for hours just doing this, you know. But this is the chat, so you can put your markups. You can put your markups in here. There's a lot of people in here that are on different levels. This is a good place to ask questions. Sometimes we'll put you know, notices out here. SPX for some reason has been shooting up, and I don't know why. But so that's the chat. This is just a place to interact.
Are you sharing your screen? Because I'm still seeing Trading View.
Oh, you're still seeing Trading View? Hold up. Let me get this back over here. I'm trying to look under my camera. Let's see. It used to not have me do that. Can you see it now?
Yeah.
Okay, cool. So this the blue one, this is the chat. This is where you see people dropping the markups and stuff, talking. You know, hey, have you seen this? Hey, look at this, check this out, you know, kind of stuff. It's a good place to as you're practicing to get your markups out there. Say like you're like, all right, I got this scenario and I'm gonna mark it up. Or if you see a markup that I do on a mentorship call or drop in a signals chat and you know, mark it up yourself. It's try, you know, so you can see where it's coming from. And with that being said, so this is the chat to interact, put out your ideas out there, see what, you know. Also the signals, so, and I tell everyone this, you see I got this marked up. You got a zone, boom, rejection. Again, we got the area where it's at a trend in the zone, divergence showing downward. This one did hit one, if not two take profits. I think it came down to here, turned around. But anyways, so these, I tell everyone this is the way I see it. It's the truth, I believe. That the signals are, you know, it's good to take signals and it's to make profits and stuff off signals, but understanding, taking a look at it, I see it more like as a learning tool. Like, okay, why draw the zone right here? You know, why this trend is right here. So that's what this one channel is for, the green one. This is the paid signals. This is the one y'all got for free for 6 months. So this is just has trade ideas. Make sure to read, I would say make sure to read, you know, what, because sometimes I'll put something up here and it may be missing an indicator. Let's see. Just saying Moderna had completed a head and shoulders. It actually came down, but it's heading back up now. But read the little captions just to kind of explain. I'm still in this one, by the way. It's still a good point. I think it's a good opportunity. These airlines, and I was just explaining here. Looks like the airlines they're really pushing for the airlines to get stimulus, to get their help right now, and they're down. It's one of the areas that has not recovered at all. So I have an airline portfolio, you know, United Airlines, American Airlines, and Boeing. I selected Boeing because they have that new jet they're looking to get back up in the sky. So with the renewed hopes of the stimulus, we're starting to see a liftoff in this stuff, but it's kind of been up and down, as you know, because they're bringing it on and off the table all the time. But anyway, so when I'm putting this stuff out here, I'll try to explain reasoning behind it, because it's more important to gain understanding than it is that any profits. Even though profits are good, you know, you will make some profits. It gaining understanding of why taking a trade, and building that conditioning to identify a good opportunity. The value in that is greater than any value that you'll ever get off of taking a signal. Not to say that there's not value in a profits gained from a signal, but developing and helping aid your skill set along the way by looking at this stuff. Be like, okay, I can see that, and I can see this, and I can see why, you know, this, there, and that. So that's the green one. That's one signals channel. That's the premium signals channel. This free signals channel, this is where we had started everything. When I had got out of that mentorship that I was in, I just didn't have anywhere to this is how we all got here. I just didn't have anywhere to place. I was providing signals at the mentorship that I was in, and when I left there, I didn't have anywhere to place my signals. I enjoyed giving out the value, giving out signals. I want to, you know, show people what I'm seeing, you know, and stuff. I love that. It's one of the favorite things I like to do. So I started this channel up, and then we started getting like a whole lot of take profit hits, and then people started coming over, and here we are. So that's what this is, the free signals. This is like that's why it's free, because it started up, really didn't have any intentions to do anything, but here we are. This is what's gotten us here. So this is what this channel is about. We're still we've been caught up, you know, building the new platforms and stuff, getting adjusted, smoothing out our own rough edges and stuff. So we haven't been putting as many free signals out there, because we've been dumping more into the mentorship and everything. But from time to time, you'll still see I've still putting some ideas out here, and then also news, like important news. This one right here, whenever Trump said the oil had rose up in hopes of the stimulus, because if the airplanes were going to get stimulus, and that meant that oil, there's a good chance that oil was going to receive, you know, from that. So because if planes are going to be getting fired up, then if the airplane places are going to be fired up, then they're going to be fired up about that, because they're the main consumer of oil. But anyway, so once that hope diminished and oil hadn't responded as fastly as the stocks did, then I dropped this in here along with this, because there's a hurricane out in the Gulf right now too, where all the oil is, along with the diminished hopes of the oil. So this is a fundamental call to sell oil, you know. So we sold oil, made some profits, and so there's ideas and stuff in here, trade ideas and stuff in here too. Any important announcements and stuff we'll put in there. We started a pro mentorship signal group for people that weren't able to make the calls, the mentorship calls, so they wouldn't miss out on the signals and stuff.
I don't think I have that. I think I'm missing that one.
Okay, we'll let me see. I'll go ahead and copy it right now. Never really done it from here.
It's okay. You don't have to do it now.
We'll get it to you.
Okay.
I hadn't been using it as much. Really what I've been doing lately is on the mentorship calls. And I hate people miss out on opportunities and stuff. There's a reason why we made it. I understand that everyone can't make it to the mentorship calls all the time. You know, everyone's got other stuff that they got to do. You know, people are at different places and are able to dedicate different, you know, amounts. So we made this channel because during the market reviews and the mentorship calls, we cover a lot of trading opportunities that go on there, but a lot of explanation goes along with them. And it's really hard to, you know, type all that stuff out. Cause you know, that, and again, that's why there's so much value in the mentorship, because as we're going through, then you don't just get a picture, but you get a description,
reason why, and everything. Yeah.
Absolutely. So I mean, so if you take the training course, you know, the training course, the taking signals, the still signals, you know, the pictures, and then you take market reviews and having the ability to ask questions and stuff like that, also to interact in the group and learn from other people in the group, then that's what makes everything work and get you like above the curve, like faster and everything. So it's not just by like having it's not just by buying the book, but it's by getting up and going to class, you
talking
know,
with people, interacting, see what they're doing.
Having study partner, you know, whatever, raising your hand, asking questions,
for
all
sure.
that stuff, man. So
cool. I gotta run, man, but
Sure.
Thank you so much for your time. I really appreciate it. I know what I have to do to kind of be like get from here to there to there to there. So
for sure.
But I really appreciate your time. I'm not sure where Will went, but really do appreciate it. Really do.
For sure, Jonathan. Anytime, man. I'll go ahead and this is recorded, so I'll go ahead and get this to y'all too.
All right, man. Sounds good. Thanks so much.
All right, for sure, Jonathan, man. We'll holler at you later, man. Hope you have a great night.
Later.
All right, later, man.